Focus. Ideate. Innovate. Enable.
Hello and welcome to India on the Move Season 2. I'm your host A.B. Ravi. Last week we discussed asset allocation strategy of private banking during volatile times. This week our focus is on wealth management. The reason we are focusing on this sector is because India is home to about 2.5 lakh HNIs, and this number is expected to reach 3.7 lakh by 2022. And what is heartening to note is that India's HNI numbers are growing at 9.2% per annum, but the global average is 6%. Against this backdrop, how is the wealth management industry gearing up to take care of this premium segment and be competitive? To my mind, the way forward is innovation in wealth management. That's our topic for discussion today. Joining me on the show is Mr. Nimesh Shah, Head Wealth Management, Investment Research and Products, State Bank of India, Mr. Milind Ganatra, CEO, Miles Software, and Mr. Nitin Singh, Managing Director and Head Wealth Management, Standard Chartered Bank. Gentlemen, welcome to the show. Okay, if I may begin by asking all of you actually, what kind of innovation have taken place in the last 5 years that have made life easy for HNIs and also of the wealth managers?
So the technology has really helped investors, invest in a much more smoother manner. And from that perspective, the online capability to do transactions for investments and monitor them regularly is the major innovation which has actually changed the way wealth management has worked. So initially you used to go to client's place and take your papers and all that. All is gone now. It's all available on the tab. It's all available on the net, and therefore there is a lot more transparency, and there is much more capability to really analyze your investments in a much smoother way now.
Mm-hmm.
Of course, just to add to Nimesh, of course, that's changed in terms of how do you transact online. But there's one more fundamental change which is coming in is to how do you quickly onboard a customer. Now, the onboarding of a customer can be digital so that there is no paperwork to be signed up, although all the banks don't provide that. But we've seen more and more banks and wealth management firms going towards that direction, allowing investors to onboard themselves digitally, which makes him closer to ability to seek advice and transact on an immediate basis. So I think that's a key change.
Nitin, looking at your own bank's portfolio, what are the kind of changes?
So I think if I actually take on from what both the gentlemen said, of course, one of the two key changes that has happened is both from an onboarding and an investing journey. Because, for example, to give you an example, for us, one of the biggest changes for us in the last 1.5 years has been the fact that now we digitally onboard accounts. We are seeing a huge spate of customers coming online and doing their entire investment journey online, from being able to open an account, to being able to do the risk profile, to being able to select products and then being transacted it.
Okay.
I think another piece that people haven't given that much importance to but has really fundamentally changed is the nature of servicing. Because going from a paper-intensive model to a model today where customers are able to view their portfolios, they're able to see it from an aggregation perspective through the RTAs, etc.
Like one-page view.
A one-page view has really helped change the perception of investing within India and has really helped remove a lot of the barriers of resistance that come in to just making life easier for customers.
Okay, so what are HNI really looking at when we talk about innovation? Are they looking at IT related or on the investment front? Are they very demanding today?
Customers are always demanding, and that's where the learning happens. In terms of the requirements, I think it is equally both on the ease of doing a transaction through technology, and also in terms of giving a variety of products which will meet their requirements for returns and given the risk which they have. So yes, in terms of as you go up the chain in wealth management, definitely there is a need for alternate products, structured products, which can be actually tailored to the requirements of probably higher risk and higher return. But otherwise, at a retail level or at a HNI level, if you distinguish between HNI and UHNI, at a HNI level, it is pretty much as of now the same a plethora of funds which are available, or fixed income investments which are available. So it's pretty much standard. But that's where the evolution will happen, and that's where the product quality and the product suite will make a lot of difference as far as your client retention is concerned.
What's your observation? You've got an outside perspective of the industry.
Right. Okay, so my perspective is, obviously, as a customer, he's seeking a risk-reward ratio, as Nimish I highlighted, where the customers weren't aware so far. My belief was they were always believing on performance of the portfolio, and they were never seeking at the risk which was being undertaken to achieve that performance. Now, more and more customers, what I see of, are wanting to understand what is the risk which they have been taking, to receive this reward. And which is what I've seen the wealth managers and my clients focusing on risk reward as one of the key parameters while they're delivering an advice to their customer. Of course, the delivery of the advice is they're seeking it to be consistent, which is where we saw historically a challenge where technology is playing another critical role, where the delivery advice was not consistent, which is where an organization, institution was not able to control the delivery of the advice using their wealth managers, using a technology that is again transformed. So I think, and that is where the customer is really seeking risk reward and consistency of the advice. And of course, the innovation in product, which Nimish talked about, as there's not too much of innovation, very honestly, I have seen in the product line, although there are structures, but still the plain vanilla mutual funds do brisk business. Now it's become 21% of the total fixed deposit size, which is very heartening, and which is where I think all the wealth management firms have done extremely well in educating the customers the advantage of investing into a mutual fund. I think the basic product works well, provided risk reward is made to understand to a customer. That's my perspective.
Let me get the banker in actually. Not much of innovation, but I'm saying how technology is helping allocation of asset and meeting wealth managers' goal. And when I look at fixed income, bank assurance product, credit solution, any other asset class, real estate or gold or...
So, interestingly, whilst when we talk about wealth management, and we are talking about it right now, we are talking a lot about mutual funds. But actually, if you look at it, one of the earliest proponents of using technology has been insurance firms. And insurance firms, given the scale and size that they've had historically, have been one of the proponents of really being able to use technology to scale up. To give you an example, in our case, we only use digital solutions to sell insurance products to our customers. Our entire process journey, right from getting a customer to getting him to select a product, to getting him to find a solution, to really even issuing the policy for him, is all digital because it's all tab-based. And this is something that insurance firms are one of the first to do. There's a lot of work that insurance firms have now done, which is, a lot of health insurance firms have now come up with wearable link devices, where if you wear your GoFit or whatever, it'll actually link up to, and it'll keep giving you a health performance report, which will really influence the pricing of your next policy. So there's a lot of interesting stuff that's happening within the market. It is exactly like a dashboard. So the way that we use it, but it also then gives you almost a financial motive to ensure that you're keeping healthy, because you know that will influence what the pricing on your policies, etc. is going to be. So these are the various kinds of things that we are seeing happen today, and something that we are at the forefront of partnering with our partners. I think the other point is that products like lending as well as like FX and remittances are tailor-made for online. We had seen a huge growth happen in terms of online remittances within the past, both for NRIs sending money into India, and now we are seeing also an equal large growth in terms of your LRS remittances going offshore for high net worth customers. Again, technology is playing a very big role there. I think the second piece that we are seeing more and more of is with NBFCs coming in and with large banks now investing in terms of credit solutions on wealth. You're making it more and more easier for customers to be able to take facilities against those. People have launched digital loan against share solutions. People are able to give you almost instant credit. So this whole entire journey is actually moving more and more digital, and it's not moving at the cost of the physical assets that you would put in terms of RMs, but really as enablers for them to reach out to a larger set of customers.
At one level, you have this HNI, the business is getting very competitive. And innovate is commoditized. At the other end, you have the same avenue of investment. So what separates men from the boys?
Basically, you have three segments of customers today. You have a mass affluent and an emerging affluent customer. You have a high net worth customer and you have an ultra high net worth customer. The ultra high net worth customers' needs are very different. I believe you would have discussed it earlier also in terms of asset allocation for private banking customers. They are in the search for yield. They are in the search for more and more better returns, risk-adjusted returns, sophisticated products, international products. There really what separates the men from the boys is the quality of the relationship manager, the quality of the advice, and the quality of the access that you're able to provide them. I think if I look at it the other end, which is the mass affluent, emerging affluent, there it's all about ease of access and of ease of use, and which is where digital plays a huge role. Being able to provide an individual a goal planning solution to say, if you have the marriage of your child 15 years later, how do you make that goal personal to yourself and how do you start investing and monitoring it, right? How do you access that on a day-to-day basis is very key. I think the high net worth portfolio, which is now a larger portion of the market, falls somewhere in between.
Okay.
They need the physical advice. They're professionals, people on the go. They want to have access. But at the same time, they also want somebody to turn around and to be able to tell them what to do. I mean, even today, the direct plan only forms about 90% of high net worth portfolios, of folios. 81% is still invested through distributors because people see the need for getting professional advice. So it's different strokes for different folks.
Okay. Milan, I want to ask you, can innovation make wealth management very customized instead of one size fits all?
Absolutely. I think technology plays a very pivotal role in ability to use lots of tools, let's say lots of things like on AI, machine learning, which will allow the wealth managers to customize the solution based on the customer profile. Customer profile is just not a risk profile, but lots of content or lots of data which can be ingested into the system so that it can throw up absolutely customized advice for each of the wealth manager, each of the customers. I think that is going to be the key thing. The technology is going to play a role and is started playing a role in the Western world. Although we've seen some flavor using robo-advisory and so on here in India. But still it's a bit of a long way to go as far as India is concerned. But technology is going to play a very key role in providing customized portfolios using various parameters, using various data points, including health, including the behavior, his social behavior, and so on and so forth. I think it is very, very possible, and it works very well.
You talked about robo-advisor. How much is it being used by you all? And how do you mixing robo-advisor with personal touch also?
I think these two things are not separate. We are seeing a confluence of where we are working very closely with the FinTech firms that we call it today in terms of being able to develop capabilities for our customers. Because I think in India what you really need, and I've coined this phrase to call it phygital, which is physical and digital mixed together.
Okay.
You need the access and the comfort and the trust that the relationship manager provides you, but you also need access to all of these solutions that we are developing. To give you an example, what we've done is that we have now a variety of solutions that we are developing with FinTech players in terms of goal planning, in terms of customized portfolios as per your risk profile, in terms of customers being able to go and compare across funds and look at various solutions that meet their needs, and to be able to do analysis, in terms of returns, in terms of various other risk parameters, to provide him all the information that he needs.
So is the FinTech industry, the entry of FinTechs, been a game changer for the wealth management industry?
Yes, it has been, and I think it will continue to kind of be a game changer as far as the way money is being managed. Like what Milan mentioned, and that we have a lot of AI capabilities. There is deep learning capabilities. Now, just to give you, an example, that understanding the cash flow of a client from the bank statement itself can be a huge kind of a game changer for how you are approaching the client. Right? There are a set of clients who are regularly calling you or investing between the 1st and 5th of the month. Right? You know that there is inflow coming in. You know there is a possibility of getting in touch with them. So that's how FinTech is going to be, like what Nitin mentioned, a combination of both physical and digital capabilities. Data mining is, I think, it's very, very important to understand.
So I want to ask you, what are the emerging trends? Is it AI, ML, cognitive computing, robo-advisors, big data, and have you enhanced your investment in new tech platforms?
So I think India is slightly in early days as far as robo-advisory is concerned, because in India what has come till now in robo-advisory is largely more of assisted investment rather than actual robo modeling as far as the asset allocation is concerned. So while that development happens, but a big data, for example, we at Wealth Management, we also have a data analyst in our team. Right. The idea is to make sure that we are mining the right data and being in front of the client at the right time, or prospecting the right kind of people at the right opportune moment. So that's where analytics is taking a lot more importance than otherwise. Big data was only at a bank central level. It was never at a wealth management level.
Okay.
So we have kind of understood the requirement that yes, ultimately going forward, that's going to be the way out.
Nitin, how is it with your bank? You're a global bank. How was the scene there?
Very similar. Actually, he's right. I think one of the biggest changes that has happened is in terms of analytics and in terms of being able to use the data that is provided to you through various sources in a coherent manner to be able to really derive value from it. So be it in terms of the kind of targeting that we do for customers, be it in terms of the campaigns that we run, be it in terms of being able to analyze needs for customers, as he rightly said, be it either on cash flows when money is coming in, either on the fact that we are seeing which customers are investing in what kind of instruments, either with us or outside of us, what are the various needs that we can provide. More importantly, being able to do modeling around customer profiles to say your age, your needs, your company, this is the personal information that I have, which essentially means that these are the kind of needs that you would have, and therefore how can I reach out to you and try and help you fulfill those needs.
So this sector is booming.
Correct.
So do you see talent easily available?
Of course, I'm sure my folks and my clients always face an issue on getting good talent as far as advice is concerned, which is where we believe technology is going to play a key role, because to get a good talent which you can trust and is able to garner business is never easy. And which is where technology using artificial intelligence or machine learning will enable various guys actually, for the wealth management firms to educate their people and deliver advice consistently, what they want to deliver. And they'll be able to easily scale up, because talent is a scarce thing, okay? And technology is going to play a key role, according to us.
Where do you see this sector 5 years from now?
There is a lot of scope as far as digitalizing and financialization of the entire wealth which the country has, and to that extent definitely you will require products. So the innovation both on the product side and how you deliver that in those products are going to be the key going forward, and that's where I think it's a combination of big data. But big data, one has to be aware, also aware that if there are policies built in or there are biases built in, the biases get amplified. So controlling those biases and therefore expanding is going to be the key going forward, and it's humongous scope as far as the Gen Y is concerned, and that's where most of the wealth is, I think, being targeted.
Milan, what do you see it?
Trust is going to be the key factor, as technology can play, as Nimish said, can amplify an issue, but can always control that. You could have various checks and balances. I think the key factor, which is going to be in next 5 years, is can I transact every single financial product digitally? Today you have a massive challenge why mutual funds are popular, because I can transact it completely digital. If I was to invest into a portfolio management product or a structured note or any other financial product, they're not today available digitally. It's all physical, and which is where some of these things have not picked up. I think that is going to transform in next 2 years. Miles is playing a key role in that, in terms of how do you really enable all financial products which can be digitized. I think that is going to be the key thing, which will open up lots of options for customers and the consumers to buy a right product at right time, and ability to deliver this product by several wealth managers, whether they are small or large in size. Because today there are advantages which a large player has, which a smaller player does not have. Using blockchain and so on will evaporate. I think it is going to be a very different world in next 5 years in terms of how one will be able to deliver an advice, how one will be able to transact across all the financial products which are available and not confined to mutual fund I think is going to be the key change we'll see in next 5 years.
Final word to the banker.
The future of wealth management in India is very bright. I think we are at the cusp of, to call it a revolution. You've seen, whilst you may have seen numbers change drastically over the course of the last 2 to 3 years in terms of almost a 20-25% CAGR growth, I believe we will have an equally large growth going forward. And what will really change is the access of instruments to customers. We've still just scratched a surface of the wealth that we have within this nation and the number of customers investing in it. We are very happy with the fact that we've got so many lakhs of folios, etc. But that's nothing in front of the billions of population that we have. I think that. The second piece being as the technology and the product innovation that will happen to really ensure that 5 years from now, this is going to be a very different industry. I think maybe 2 to 3 times the size as well. I wouldn't be surprised to see that. And there'll be space for everyone to grow within it. Really at the end of it, what we have to be careful about is ensure that that nothing happens within this industry that breaks the trust of customers. Customers have come in with a very different mindset.
Okay.
If you look at customers today, when markets are correcting, it's a very different mindset to what it used to be a few years ago, because people have got much more educated. People understand that they have to remain there longer. And I think it is very critical that all of us as custodians keep that trust and ensure that whatever that we do, be it technology, be it product innovation, be it how we reach out to them, we keep that trust in mind and we ensure that we are building on that.
So the key takeaway is innovation, product development, digital delivery, and the future is very bright is what you're saying. That's the key takeaway as I look at it. Very nice talking to you, gentlemen. Nice for being on this show here. Thank you very much.
Thank you very much.
Yeah.
Focus. Ideate. Innovate. Enable.